our brilliant CEO, Mr. Robert Iragala, Board of Directors, Officers, Investors, ladies and gentlemen, a pleasant morning and welcome to Annual Stockholders Meeting live at Safari Hotel and Villas, Barangay Bolala, Bigan City, Ilocos Sur. We have sent the narrative report together with the presentation back in your respective emails yesterday. But don't worry because we also prepared a hard copy for you. Please check them in your respective tables. Before we start the financial statement reporting, may we give some few reminders. Please always wear your mask. Observe social distancing. Our washrooms are located at the end of the hall. I would also ask everyone to silence your phones at this time. If you have suggestions, questions, and comments in our presentation, please reserve it and we will have a short open forum at the end of our presentation. This is the flow of our presentation. First, we will present the overview of our company through audiovisual presentation. Next is the discussion of income statement, followed by the presentation of company's balance sheet. Then, we will have a short coffee break. After that, we will present to you the company's SWOT analysis. Then, we will share our recommendations and findings. Afterwards, we will have a short open forum to answer your questions. And lastly, the presentation of the team and acknowledgements. Sit back, relax, and let's watch this short video. Regala's Photography's mission is to create lasting memories with passion and enthusiasm in a way that has never been captured, and to treat each and every guest as if they were family. Its vision is to create memories and preserve your tales through high-quality professional photography that will be passed down for decades. Despite the pandemic, our team is able to maintain its position in the industry, and its creative output continues to flow like a stream. Our team is always looking for new ways to collaborate with one another in order to improve as a whole. Our team uses a variety of platforms to communicate with and meet our customers. In order to ensure that our clients have the finest shot and voice, Regala's Photography only hires photographers and videographers who are a lot of fun to be around when shooting. Awesome! That is Regala's photography gears and supplies, creative, innovative, and competitive business entity. Now, let's start with the presentation of income statement and its analysis. An income statement was prepared for the period to have an understanding and neat presentation for decision making. The income statement shows the accounting costs in the year of providing services following the generally accepted accounting principle. Our revenue increased to 3.19 million for the period. Cost of sales, 2.02 million. Thus, our gross profit is 1.17 million pesos. Our total administrative and selling expenses is 0.61 million pesos. This came from the salaries and benefits, freight out, supplies, rent payments, insurance, licenses, utilities, depreciation, and other expenses. As a result, our earnings before tax is 562,091.39 pesos, less interest expense, and income tax. That's why our net income amounted to 245,797.15 pesos. The result of the net income is favorable, as it is a net income rather than a loss. Let's go with the comparison of our budgeted gross profit to actual gross profit. Budgeted gross profit is 35%, while the actual result of operation is 36.6%. Gross margin was exceptionally higher with 1.6% more than the predicted gross margin for the month. Next, let's go with the comparison of budgeted income tax and interest expense to the actual result. Our budget is only 7%, while the actual is 9.9%. The actual cost of interest expense and income tax was more than 2.9% compared to the budget. The results were significantly different, affecting the company's overall profitability. Let's move on with the comparison of the budgeted net income and the actual result of operation. The projected net income is 8%, while the actual net income is 7.7%. This is unfavorable since the actual net income is lower than the projected and average standard. This due to higher interest expense and income tax. The key issues of operations. According to the result of the comparison between the actual costs and budgeted costs, it reveals that the actual net income was lower than the anticipated net income. This is unfortunate news for the company because it signifies that the expected net income was not realized. And if this continues to plummet, the company will incur a significant loss because its profitability would suffer. The high cost of interest and income tax is another issue. If this pattern continues, the company would face yet another concern as it will result in lower net income. The company makes money through sales, but having a lower net income or smaller cost of sales than the industry average standard isn't enough. With all these key issues in mind, the company will be able to develop a plan or new strategies for resolutions or even just eliminate these issues entirely. Let's continue with the discussion of company's balance sheet and its analysis. Our company's total current assets is 1.8 million. The breakdown is presented in your handouts. Non-current assets is 3 million. So the company's total assets is 4,931,400.71. Now let's go with our total liabilities with 2.2 million. Total equity with 2.7 million. That's why our total liabilities and equity is amounted to 4,931,400.31. The company's total assets are primarily composed of fixed assets, with cash as the second largest component, while the remaining portion goes to other assets. The corporation has a large cash balance, indicating a good cash position and short-term financial well-being. Additionally, because the majority of the company's total assets are financed through equity, which benefits the company. Higher shareholders' investment levels demonstrate to potential shareholders that the company is worth investing in. Now, let's go to liabilities and equity. According to the company's statement of financial position, total equity exceeds total liabilities. This is a positive indicator because the assets are financed more heavily with equity at a rate of 55.72%. On the other hand, the majority of the company's total liabilities are short-term payables. The company's debt-to-equity ratio is 79%, which is favorable for lenders and investors as well as our company. The company's working capital amounting to 485,057.67 is enough to finance our 2022 growth plan. Let's move on with the comparison of the actual results to the budget and industry. To the current fiscal year, the company's current assets exceeded the industry average but fell short of the budget. The ratio of non-current assets to total assets did not meet the industry average, but was higher than budgeted, indicating that the company invested more in non-current assets than planned. Current liabilities are greater than the industry average, but less than budgeted, resulting in a positive variance. Non-current liabilities is lower than the industry average and company's budget. This indicates that the company's non-current liabilities are not being managed effectively. Total liabilities of the company are lower than the industry average and came in lower than anticipated. The company's equity is greater than the industry average and greater than the budgeted amount, which is a positive development for the business. Ratios were used for further analysis. For the period, the company's current ratio is 1.37, implying that it has 1.37 pesos in current assets to cover each 1 pesos in current liabilities. This indicates that the company's current assets are sufficient to cover its current liabilities. When compared to the industry average of 1.4 times, the company fell short of the industry average, indicating that it is falling behind the competition for liquidity with other businesses in same industry. When compared to the budgeted current ratio of 1.27 times, the actual ratio is higher, indicating that the company met its target ratio. This demonstrates that the company has managed its current assets effectively in terms of meeting the budgeted ratio. In terms of operational efficiency and asset management, the company's actual accounts receivable turnover ratio is 15.16 times, implying that the company's accounts receivable will be converted to cash 15.16 times in 2021. Actual accounts receivable turnover ratios meet both company and industry standards. This indicates that the company's collection and credit policies remain competitive. This also demonstrates the company's efficiency in collecting receivables. Additionally, the company's average collection period of 24.08 days is shorter than the industry average of 30 days and the company's standard of 28 days. Again, this is a positive indicator for the business, as it may indicate that the company has sound credit policies and that customers pay their bills on time.
Key financial issues.
The company's office equipment account is noteworthy. This is 4.3% less than the industry average. In comparison to other enterprises in the field, the firm lacks office equipment. The company should buy additional office equipment and maximize it, from computers and scanners to phones and copier systems. Office equipment is considered as important because it improves communication, worker efficiency, saves money, and organizes the corporation. Regala's photography gears and supplies presently has a ratio of 1.40, which is 0.05 below the industry average. This denotes a very insolvent company. The current ratio is one of the most glaring issues as Regala's photography gears and supplies meet the industry average of 1.40, while the firm has a current ratio of 1.35. This means that for every 1.0 debt incurred by Regala's photography gears and supplies, the company has 1.40 available to pay it. Before we move on to the next presentation, let's first have a short coffee break. We'll come back after 15 minutes. Feel free also to use our comfort room located at the side of the stairs. Thank you. back. I hope you feel more relaxed right now. Let's continue with the discussion of SWOT analysis. SWOT analysis is a strategic planning and strategic management technique used to help organizations identify strengths, opportunities, weaknesses, and threats related to business competition or project planning. Let's start with the company's strengths. The result of the income statement is favorable as it is a net income rather than a loss. The corporation has a large cash balance, indicating a good cash position and short-term financial well-being. Assets are financed more heavily with equity. The company does not rely on credit and debt to fund and operate. Having reliable financial statements is advantageous to the company since this gives a better grasp of the company's financial situation, both current and future. It will serve as a roadmap for the company's future activities. Weaknesses. The actual cost of sales is lower than the budgeted and industry standards. The actual cost of interest expense and income tax was more than the budgeted and industry standard. The actual net income is lower than the projected and average standard. Non-current liabilities exceeded both the industry average and the company's budget. This indicates that the company's non-current liabilities are not being managed effectively. Threats. There is a 4.1% difference between industry standards and the company's actual cost of sales, which is lower than the average standards in the same industry. In comparison to other enterprises in the field, the firm lacks office equipment. The company should buy additional office equipment and maximize it. Regala's photography gears and supplies presently has a ratio of 1.40, which is 0.05 below the industry average. This denotes a very insolvent company. According to the balance sheet, current assets and current liabilities look to be in good shape, exceeding in industry averages. However, one aspect of existing liabilities is worth noting: accounts payable. The company fell short of the industry average, indicating that it is falling behind in the competition for liquidity with other businesses in the same industry. Opportunities. Majority of the company's total assets are financed through equity, which benefits the company. Higher shareholders' investment levels demonstrate to potential shareholders that the company is worth investing in, given the large number of investors willing to finance the company. Additionally, a greater ratio indicates to potential creditors that the business is more sustainable and therefore less hazardous to give future loans. Overall, the company's results were good but not great. The forecasted income statement, even though it is positive, actual net income is lower than the projected and average standard, which might have affected the company's operations. The following recommendations were based on the outcomes of this report as provided, analyzed, and interpreted. First, the company should continue to apply and improve some of the other areas to have a better increase in the net income. The company should cut unnecessary expenses, resulting in lower operating costs, higher net sales, and a more favorable operating ratio. The company should develop a plan or new strategies for resolutions. The company can raise its asset investment, resulting in increased revenue and further improvement. The company's non-current liabilities must be managed effectively for a positive business development. The company should buy additional office equipment and maximize it. Accounts payable must be studied because they account for almost 80% of current obligations. The collection of financial statement data and preparation for the analysis should always be given adequate time. Assess any financial statement ratios in a comparative perspective, comparing current ratios to those from previous periods or to those of comparable companies or industries. Let's now move on to the most interactive part, the open forum. If you have comments, suggestions, or questions, feel free to raise your hand or press the red button in your table. Thank you for listening. Before we end, I would like to present to you the hardworking people who make this report possible. Starting with our auditing department head, Ms. Jiezle Mae Remolacio, our Chief Financial Officer, Ms. Joy Cabagsang, our accounting manager, Mr. Jhunel Tanurio, and yours truly, Angelina Molina, your accounting supervisor. We will continue to smile and serve with a happy heart. We would like to express our deepest appreciation to all our co-employees who help us to make this report possible. A special gratitude to our very supportive CEO, Mr. Robert Iragala, whose contribution in stimulating suggestions and encouragement honed us to become a better professional accountant. Thanks also to www.allppt.com, www.youtube.com, and pixart.com for the beautiful icons and templates that help us in delivering this presentation. To God be the glory.